Good morning to all of you, dear learners, and welcome to this teleconferencing session. This session is devoted on partnership, introduction to partnership and distribution of profits. This topic is covered ECO 14, Block 3 and Unit 7. Here we have Dr. Sunil. He is faculty member, School of Management Studies. He will discuss on this topic with you. He touches upon what is partnership and how to prepare partnership deed. If you want to start a partnership kind of business, what precautions you have to take it while preparing the partnership deed, and the provisions relating to partnership accounts. Then after, distribution of profits. What are the various provisions relating to the distribution of profits? How to decide the distribution of profits among the partners? Now I request Dr. Sunil to start your discussion with our learners.
Thank you, Professor Raju, for giving me a very nice introduction and very warm welcome. So, I, on my personal behalf and on behalf of my esteemed colleague Professor Raju, I welcome you all, dear learner, in this teleconferencing session, which is to be on the topic Introduction to the Partnership and Distribution of Profit. So, well, learner, before moving ahead, I would like to make it very much clear that this session will be on the topic, as we have already mentioned, partnership, introduction to the partnership and distribution of profit. So in case at any particular point of time, if you feel any sort of confusion, any sort of ambiguity, any sort of doubt, so you won't hesitate at all. You all are welcome to come forward and you can ask your question. I'll be very happy and I'll rather feel very proud, privileged while answering your question. So, in fact, learner, when we talk about partnership, as it implies that it is in fact the process where at least two or more than two persons should be there to constitute a partnership. So, when two or more than two persons who have been agreed to start a common business, or who have been agreed to share the profit of a business carried on by all, or any one of them acting for all. So in the partnership where two or more persons are there, so even all the partners can actively participate in the business. They can look into the affairs of the business and they can take a collective decision. But sometimes what happens, that the partners who have been agreed to carry on a particular business, so out of the existing partners, maybe that there are some partners who don't have the time. So on account of paucity of the time, on account of the shortage of the time, even few partners or any one of the partner can also look into the business affairs. So when one partner is looking into the business of the affairs, it means he is acting for all the partners, where it implies that when a partner is doing something on the behalf of the partnership firms, where different kinds of partners are there, so his act can also be bound by the other partners, or when he is doing something, so his act is completely or solely a step towards a decision which is meant for the partnership firm as a whole. So here, as per the section 4 of the Partnership Act 1932, partnership means the relationship between the persons who have been agreed to share the profit of a business carried on by all or any one of them acting for all. So as I have already mentioned, or as I have already discussed, that even if when all the partners are not in a position to get the time spared for looking into the matters of the business, in that case few partners or even a single partner can also look into the business affairs. So here we can discuss the essential features of partnership. As I have already discussed the partnership, so here the first ingredient that comes into the picture is agreement. So when we want to constitute a partnership, there must be an agreement, because no partnership can be constituted until or unless there is an agreement between the partner. So the presence of agreement is quite essential in order to constitute the partnership. Then second one is number of persons. So dear learners, as I have already told you that in order to constitute the partnership, there should be at least 2 or more persons. So when 2 or more persons have been agreed to carry on a certain business and who have been agreed to share the profit or loss of a business, so that is also essential. Then third one is business. So that is also the essential ingredient in order to constitute the partnership, that there must be a business, because until or unless the presence of business is there, it means when the partners have been agreed to carry some kind of business, some kind of venture, where either at the end of the accounting year or whether at the end of the financial year, either they will be earning profit or they will be occurring loss. So that amount of profit or loss has to be shared among the partners in their agreed ratios. So when they constitute the partnerships, so then and there that agreement takes place between the partners regarding the profit or loss sharing ratios. Then sharing profit and losses, as I have discussed, that until or unless the partners share the amount of profit or loss, partnership cannot be completed. So in order to complete the partnership, whatever amount of profit or loss is there, that has to be shared among the partners in their agreed ratios. So in case if the profit is there, they are entitled to get the amount of profit as per the agreed profit sharing ratio, and in case if the loss is there, then again they have to bear that much amount of loss, whatever the amount of loss that comes to the partner as per their agreed sharing ratio. Then next point is mutual agencies. So as dear learners, I have told you, the business may be carried on by all partners or any of them acting for all. So a partner can bind the firm and the other partners by his act, or he is also bound by the act of the other partners. So that does not mean that in case if only a single partner is looking into the affairs of the business, he is only the solely responsible. No, not at all. If one partner is looking into the affairs, all the partners, it means the partnership firm as a whole is solely responsible, because that partner is acting on the behalf of all the partners. It means partnership firm as a whole. So then the next very important aspect is partnership deed. So dear learners, when we talk in terms of partnership deed, so it come into existence by an agreement among the partners. So sometimes the partnership deed may be oral, may be in written. So it is not necessary that the partnership deed should be in writing. If the partners are agreed to carry the partnership deed orally, then it is equally fine. But dear learner, when two or more than two persons are involved in any kind of activities, then it is always preferred that whatever agreement has taken place among the partners, that agreement must be in writing. That is always preferred, because sometimes what happens that today the partners who have been agreed to carry on the business have a very good understanding, they have the mutual faith, confidence, everything. But sometimes what happens that once they start doing any kind of activities for which they have been agreed upon, so at any particular point of time, when any dispute or difference of opinion arises among the partners, and in case where we don't have the partnership deed in writing, then definitely that will create a problem. So it will be very, very difficult to sort out their dispute. So written deed is always preferred, and when we have the deed in written, in that case we can take the help of that deed, we can produce that deed in the court, and the things can be sorted out in a easiest mode. So a written document containing the terms and condition of the conduct of the partnership deed is in fact called as partnership deed. So it is basically a written document in which the terms and conditions are mentioned, and on the basis of those terms and conditions the partnership business carry on. So partnership deed consists of the following particulars. The first one is name of the firm and place of the business. So in the partnership deed, the name of the firm should be mentioned. So while giving the name to the partnership firm, the partners must be very, very careful, because they should also take into account some kind of name which cannot be used for the partnership firm. There are certain names where we cannot, like see for example in case of public undertakings institutions, so those names like Royal or like others names which are meant only for the institutions in which there is the intervention of the government, like national, like Indian. So the partners must avoid such names of the partnership firm which can be which can create some problems in the future. So they should be very particular while giving the name to the partnership firm. And the
Dr. Sunil, this procedure the partners have to be followed if they desire to opt written partnership agreement.
Mhm.
If they opt oral agreement, they need not follow this procedure.
See, sometimes what happens, as I have already mentioned, that in case if they have the written agreement, then these things should be very much be present in the agreement deed, so that as and when anything arises in the future, anything happens in the future, that can be sorted out on the basis of that written agreement. But in case when they don't have any written document, in that these things are
Legally, they
absolutely
are very weak to solve their problems.
problems. Yes. That is why this written document is always preferred. Then the next one is name and address of the partners. So the name of the partner should be mentioned and their address should also be mentioned, because whenever any sort of communication has to be made, in that case when we have the complete name and address of the partner, then anybody who want to make the communication to the partners, they can easily communicate. So for that sake, name and address of the partners should be mentioned. Third one is nature of the business and its duration. So the kind of business for which the partners have been agreed upon and its duration should also be mentioned in the partnership deed. Sometimes when the partners feel that the kind of activity or the kind of business they are going to perform will do or will fulfill their aim only for a particular period, that particular period may be 1 year, that may be 2 years, that may be 5 years. So that should also be mentioned in the partnership deed. So when the object of that partnership is over after a particular period, as I have discussed that it may be of 2 years, so automatically the existence of that partnership will automatically come into an end after that period is over. So sometimes when the partners feel that okay, we are going to form the partnership for a period of 5 years, and they feel that our very objective of this venture will be fulfilled within 5 years, then automatically once their purpose or that period is over, the partnership, the agreement that has taken place among the partners will automatically wind up. Next one is amount of capital contributed by the each partner. So the amount which the partners are going to contribute in the partnership business should also be mentioned, because it is not necessary that the amount of capital the partners are contributing is always equal. In case if some partner is financially sound, he may contribute more in terms of finance. It may also be possible that the other partner who is not financially sound but he is technically sound, he is educationally very sound, in that case he can contribute less in terms of finance. So that amount which the partners are going to contribute to the partnership business must also be very much clear and should be mentioned in the partnership deed. Then accounting period of the firm. So in fact, dear learners, when we talk about the accounting period, so generally the accounting period is of 1 year, but it is not mandatory that it should always be 1 year. It may be less than 1 year. So that accounting period must also be mentioned, that in case if they are going to see the position, if they are going to see the result of all the operations of the business after a period of, say for example, 3 months, or after a period of 6 months, so that should be very much clear, and it should be mentioned in the partnership deed that what will be their accounting period. So after that accounting period, if they want to get their accounts audited by the certified auditors, they can. So that I'll be discussing later on, whether getting the accounts audited by the partnership firm is mandatory or not. Next one is profit and loss sharing ratio. So it's very important in the partnership business that profit and loss sharing ratio should be mentioned, because until or unless we mention the profit sharing ratios, in that case it will be very difficult to decide how much a particular partner or the partners who have been agreed to carry on business will be entitled of profit, and by how much of amount. So that profit sharing ratio should always be mentioned in the partnership deed, and the partners will be getting the amount of profit or loss in that profit sharing ratios. Then rate of interest both on capitals and drawing. So dear learners, here I would like to tell you very important thing which sometimes students feel it very cumbersome, that in the absence of the partnership deed, the partners who are going to contribute the capital in the partnership business, they are not entitled for any interest on the contribution of capital, nor they are entitled for interest on capital. And even if sometimes when they withdraw the funds from the business, even the business is also not entitled to charge any amount of interest on their drawing. And in case if the partner has given the loan to the partnership firm, then definitely the partner who has given the loan to the partnership firm will be entitled for the interest. Interest on capital is not mandatory. Interest on capital will be given by the firm to the partners only when it is clearly mentioned in the partnership deed. But so far as the amount of interest on loan is concerned, that amount of interest has to be paid by the firm to the partners in every case. And even if one more important thing is that, see, sometimes what happen, that when the partnership firm is not earning the amount of profit or it is occurring loss, even in that case the payment of the interest by the partnership firm to that partner will always be taken care of. But when we talk in terms of interest on capital, if it is specifically mentioned in the partnership deed that this much of interest, or according to this rate the interest will be given by the firm to the partners on the amount of capital contributed by them, so that amount of interest by the firm will be given to the partners only in a case where the firm is running under profit. So you should keep this point in your mind, that in case of capital, interest will be given only when the firm is running under profit, but in case of interest on loan, it will always be given by the partnership firm to the partners who have given the loan apart from the capital, whether the firm is earning profit or loss, that is immaterial. Then loan from partners and rate of interest on such loan that we have discussed. Maximum amount and period of drawing. Yes, this point we have to discuss. Maximum amount and period of drawing. So it should also be clearly mentioned in the partnership deed that how much the partners can withdraw for their personal use and what will be the period for which they can withdraw the funds from the business. So that should always be mentioned in the partnership deed in order to avoid any sort of confusion, any sort of difference of opinion. Then provision affecting the partnership accounts, or the provisions or the rules which are applicable in the absence of the partnership deeds are quite simple. The first one is profit sharing. So in absence of the partnership deed, the profit or loss will be shared among the partners equally. Then interest on capital. No interest will be given by the firm on the amount of capital contributed by the partners. Then interest on loan. So far as the interest on loan is concerned, no interest will be given to the partners by the firm.
If it is not mentioned in the partnership
Deed, yes. So if it is mentioned in the partnership deed, then I have explained that the interest will always be given by the partnership firm to the partners who have given the loan apart from the capital.
So in absence of partnership deed, the partners are not entitled to take interest on capital, their own capital, or even interest on the loan which they have provided to partnership.
Yes. Then interest on drawing. So when the partners are not entitled for interest on capital, the firm can also not charge the interest on drawing. If the partners has withdrawn any amount in the business, so the firm cannot charge the interest on the drawing, the amount which the partners had withdrawn for their personal use. Then the remuneration to the partners. So when the partners are actively contributing for the betterment of the business or for running the business operations very smoothly, so sometimes, as I have already discussed, that there are few partners who are technically sound, there are few partners who are financially sound. So the partners who are technically sound and who are looking into the operations of the business, so they are contributing more in terms of making the activities, making the functioning of the business more smooth. But despite being all the fact, they are not entitled for any amount of remuneration, bonus or commission for their active participation in the business. Then the next very important thing is distribution of profit. So here the distribution of profit that I have already discussed is very important, that the profit which the partnership firm has earned, that profit or loss has to be shared among the partners in their agreed ratios. So distribution of profit is quite essential in order to complete the partnership business. So here, when the method of valuation of goodwill in case of admission or retirement of partner. So sometimes what happens that in the absence of partnership deed, no new partner can be admitted to the partnership firm. But in case if the provisions so provide, the new partner can be admitted, and when the new partner is admitted, then this thing should also be mentioned in the partnership deed, that what will be the mode of valuation of goodwill and how this amount of goodwill will be recorded in the business. So here, when we talk in terms of goodwill, so here we have different kinds of method by which we can deal the amount of goodwill. So when the goodwill is brought in by the new partner in cash, again we have the premium method, where when the partners bring the amount of goodwill in cash, we make the entry that cash account debit to new partner's capital for the whole amount. Student must keep one thing in mind: when the new partner is coming in, so whatever amount he is bringing in terms of capital or in terms of goodwill, so for the whole of the amount we should pass the journal entry cash account debit to new partners capital, and consequently the second journal entry that we pass at the time of bringing the goodwill in cash by the new partner, that old partners capital, when the new partners bring the amount of goodwill in cash, new partners capital account debit to old partners capital. So that amount should only be the amount of goodwill, and the amount of goodwill should be shared among the old partner only in their sacrifice ratios. So this thing the partners, the students must keep in mind. And when a new partner is coming in and he is bringing the amount of goodwill in cash, then that amount of goodwill which he is bringing in must be shared among the old partners in their sacrifice ratio. So dear learners, as you might be knowing that sacrifice ratio we can easily calculate if we deduct the new ratio from the old ratio minus new ratio is equal to the sacrifice ratio. So in that ratio we can record the amount of goodwill in the capitals of old partners. So sometimes when the partners decide that okay, they don't want to keep the amount of goodwill in books, they want to close the goodwill account, then easily the old partners capital account debit to cash when they have decided not to retain it in the business.
Here it means that the total proportionate of sacrificing ratio by old partners is the total percentage of profit which is going to be taken by the new partner.
Yes, exactly, sir. That is why it is known as sacrifice ratio. That they are sacrificing on account of new partners coming in. Then auditing. So dear learners, as I have already discussed you that in case of partnership firm, getting the accounts audited is not mandatory at all, it is optional. But as I have discussed you that in case if the audit of the account is done by the qualified auditor, in that case it becomes easier, or the functions of the partnership firms go very smoothly. Because sometimes when we feel that when we are going to diversify the business or when we are expanding the business in the time to come, we need more funds. So in order to mobilize the funds, when our accounts are audited, when we have a very good amount of reputation in the market, then easily we can produce our accounts as a proof or as a evidence. So we can easily get the amount of loan from the financial institutions. As dear learners, you might be knowing that financial institutions like HDFC, ICICI or IDBI, any financial institution, they always prefer the audited accounts when they are processing for the loan application. So when our accounts are completely representing a true and fair picture, in that case we have a very good reputation in the market and we can easily take the loan from the financial institution. Then use of decision of Gardner versus Murray. So this was a very old decision given in case of Gardner and Murray. So here this thing should also be mentioned very carefully in the partnership deed, that whether the decision of Gardner versus Murray will be applicable in the partnership firm or not. Because sometimes when a partners become insolvent, in that case if the partnership deed provides for, the rule of Gardner versus Murray is applicable in the partnership business. So when we are talking for Gardner versus Murray rule, in that case whatever amount of loss is generated, say for example if the new partners is coming in, so when the new partners is coming in or any kind of loss has taken place, in that case that loss will be taken care by the partners in their capital ratios, and the insolvent partners loss will be suffered by the competent partners in their capital ratio. So here the question arises how that capital ratio is calculated. So even sometimes when the firm is going to be dissolved and the partner is going to be insolvent, in that case whatever balance sheet they do have at the time of insolvencies, that balance sheet must be taken care of. So here two things are very much important, that when the partner's capital is fluctuating or when the partner's capital is fixed. So when it is particularly mentioned that the partner's capital is fixed, so in that case the amount of capital which is given in the balance sheet will be applicable, and on the basis of that capital one can easily calculate the capital ratios. But when the capital is given in the question that it keeps on fluctuating, so the amount of reserves and surplus or undistributed profits which are given in the balance sheet, so after making the adjustment of reserves and surplus or undistributed profit, then the amount of capital comes, that capital ratio should be taken care. So here these are few things which are very important while deciding the amount of loss which has to be faced by the competent partners in case of insolvency of the firm. So here the next important thing is in terms of distribution of profit, that sometimes when a new partner is coming in, and in order to encourage the new partner, what generally the existing partner do is that they give him the guarantee so that they can boost his morale, he can functions, he can take part in the business activities, and so that he can feel confident that you will be entitled minimum this much of profit. So when the guarantee is given by the existing partner to the new partner regarding the guarantee of the profit, in that case that amount of guaranteed profit has to be taken care in all the circumstances. Say for example, here we have a very good example, like there are two partners, that is partner X and partner Y. So here Z, a new partner, is admitted. So their profit sharing ratio is 3:2:1. So existing partners guarantee rupees 6,000 to the new partner as a share of profit. So here the existing partner has given the guarantee to the new partner that you will be getting at least rupees 6,000 as a profit. So in that particular accounting year, the firm has earned a profit of rupees 30,000. So when the firm has earned a profit of rupees 30,000, and as per the profit sharing ratio it is 3:2:1, so here the Z profit is 1/6 of 30,000, that comes to rupees 5,000. So here there is a deficiency of rupees 1,000 because the existing partner has already given him the guarantee of rupees 6,000. So this deficiency of rupees 1,000 will be borne by the existing partner in their profit sharing ratio, which is 3:2. So here Mr. X will bear rupees 600 out of rupees 1,000, and Mr. Y will bear rupees 400 out of rupees 1,000. So when this deficiency is borne by the existing partner in their profit sharing ratio, that is 3:2, so here X is bearing rupees 600, therefore the share of profit of Mr. X is, because the ratio was 3:2:1, so 3/6 of 30,000, so that comes to 15,000, but now he has borne rupees 600 out of that deficiency, therefore the net profit of Mr. X is 14,400. Here Y share of profit is here 10,000 because his profit sharing ratio was 3:2:1, that is 2/6, so that is 10,000, but he has borne the deficiency of rupees 400 out of rupees 1,000, so therefore after bearing this deficiency his net profit is rupees 9,600. So here Z profit sharing ratio was 1/6, that was rupees 5,000, but he had been given a guarantee of rupees 6,000, so therefore Mr. X has bear the deficiency of rupees 600 and Y has bear the deficiency of 400, so that way the total profit of Z now is rupees 6,000. So sometimes what happens that in case when this situation arises when all the partners had given the guarantee, but sometimes this also happens that only one partner has given the guarantee, so that deficiency of rupees 1,000 will be borne only by that partner. So here in this case X had given the guarantee of guarantee to Z, so therefore Mr. X total profit is rupees 15,000 as per the profit sharing ratio, but now he has given the guarantee, so therefore this deficiency of rupees 1,000 will be suffered only by X, so therefore his net profit is rupees 14,000, Y 10,000 and Z is 6,000. So this was all about the distribution of profit.
Thank you very much, Dr. Sunil. You explained about the partnership and partnership deed, how to share the profits among the partners, what precautions they have to take while they are entering into a partnership deed. As you explained, it is always advisable to keep the partnership deed as a written statement rather than a oral, even though it is not mandatory, for the safety of the future to redress their problems in a legal way. Thank you very much, and dear students, stay with us for the next session. Don't go away. After the 15 minutes break we will meet again. Thank you very much.
Thank you.